All right, guys, today is May 9th. Stocks are absolutely plunging right now. And these are the kinds of days where you absolutely fucking kill it as a day trader, right? So in this video, I'm going to show you some Dow futures trades that took place today. And really, we only got two signals the entire day, right? One signal came in the overnight session, 7:45 p.m., and of course, the second signal came in the regular trading session just around 10:30 a.m. Chicago time. And we're going to try to take a look at both of those signals and really drill down and show you guys how to properly nail the highs and the lows in any market, Forex, futures, or stocks. So let's go ahead and fire this up. Alright, what's up guys? Mark here at Dino Trading. Getting ready to step out on lunch here. It's about 12:30 in the afternoon. And wanted to knock out this video for you guys and really kind of discuss the volatility that has returned with a vengeance to these futures markets. In fact, what we'll do is we'll quickly jump over to the CBOE's website and we'll take a look at the daily measurement of volatility. And guys, this is something you really have to follow every day, right? You know, you've heard me say this a million times before. Volatility is a day trader's best friend. We make a ton of profit in volatile markets and we scratch around in quiet markets. And we want to stay away from quiet markets, right? And this right here is a 3-month chart of the VIX, which is a really good measurement of volatility. And if you were wondering why April was so quiet, I mean, let's be honest, April sucked, right? Especially the first half of April, it was quiet as a fucking mouse. Well, guess what, guys? Your mind was not playing tricks on you. Look at the volatility right here. It was under 12, right? Historically low volatility. If you look at prior to April, well, most of the year was very volatile, relatively speaking. So that is why you saw some giant moves most of the year. But April was quiet as a mouse, right? You can see that right here. And then look at this giant spike, right? That we see in the early part of May. And that really tells you and also explains why we're getting these giant moves that we've seen every day this week, right? Like 300, 400 point swings. So definitely keep the VIX on your watch screen. Anyway, let's go back to looking at some charts here. So let's get right down to business, right? First thing we're going to do is we're going to take this chart right here, which you've heard me refer to numerous times as the bullshit chart. And with one click of our mouse, we're going to make the chart look like this, right? I want to see nice, clean, organized price action data. Don't show me anything else, right? Now, guys, here is a scenario that's sometimes going to happen in your market, in any market, Forex, futures, or stocks, right? You come to your computer early in the morning and the market's already down fucking huge, right? And it's not a case of price action not working. It's simply a case of the market's going to fucking trend whenever it wants to trend, right? So for those of you guys that are lucky enough to be trading the overnight session, there was a beautiful short signal right there. Draw the high, draw the low, wait for price to retrace. It gave you a nice retracement right here. And just like that, 400 Dow points. 1,200 pips for you Forex traders, in case you were wondering how to put that in context for Forex. 1,200 pips, okay? But of course, for the rest of us guys who simply come into the office in the morning and try to look for some trading opportunities, you really only had one signal. If you trade the morning session, right, which is what I do. I do not like trading the afternoon session. I want to wrap up by lunchtime, right? I got a lot of other things I like to do with my time. So I want to wrap up by lunch and see what I can squeeze out of the market for as much as I can squeeze out of it, right? So we had a beautiful long signal reveal itself right there. Okay. And so we capture these highs, we capture these lows. And now what I'm going to do is I'm going to jump over to the T-bar chart and I'm going to draw those values from our Dino Bars master chart, right? If you guys have seen my videos before, this is nothing new. If this is the first time you're watching, well, try to get up to speed in some of my previous videos on how exactly price action trading works, retracement trading works, and, get yourself up to speed. Anyway, so just to recap, these three values right here that have been drawn in our smaller time frame chart represent these three values from our larger time frame chart, what I call the Dino Bars chart, right? The signal, the high, and the low. Those are three items. This is the signal, right? This vertical line here, and then these two horizontal lines represent the high and the low. So far, so good. So now what we're going to do is we are going to draw and capture every single pivot point that is printed within this zone. So let's just go ahead and hit it with the dots just like this. So you can see we had 4 top pivot points that printed when we were looking for a retracement. So guys, you know what to do here, right? All we do is we connect our pivot points like this. There is the first one that we get. And guys, this is valid. This is absolutely 100% valid. This was a long trade that got filled, long right there. Stop goes in right here, and you can see what happens. We get filled, and it reverses and stops us out real quick for a minus 20 point stop. What are you going to do? That happens, right? You got to keep taking every fucking trade. So you can see that the next set of pivot points drew itself right there. So what we want to do is we want to connect those pivot points just like that in the form of a trend line. And once again, you can see this one broke and our stop gets placed right over here. Okay, now if I squish this in so we can see what happened, right? This is exactly what happened. And also, guys, check out the time, right? 10:45-ish to about 11:30. It's only about 45 minutes, right? So let's zoom back in here. Two things that you really have to sort of understand when it comes to trend trading, guys, right? Trend trading is always going to have a low win rate, right? Because you may have to take multiple stabs at going long or short, right? In this scenario, there was only 2 stabs. We took 1 stab right here and we took a second stab right here, and it was off to the fucking races, right? But what if you had to take 3 stabs or 4 stabs or 5 stabs? I mean, that's just the nature of trading, guys. I wish I could sit here and tell you, yeah, just draw the trend line 1 time and you'll be good as gold, but I'd be lying to you, right? The market's going to give you whatever the market wants to give you. And it's your job as a trader to do 2 things properly and do 2 things very, very well. Number 1, you always got to be spotting clues. Think of being a detective in the market, right? The market's going to give you a clue like this box right here, this green bar that printed. That is your clue that the market now wants to turn around and start going long. But you can't just rush in and go long. You have to be very, very selective about what trades you take, where to place your stops, and this might be an area where for some of you guys, you may say, you know what, this retracement is too shallow. I want to wait for a deeper retracement like you got the second time. There is nothing wrong with wanting to wait for a deeper retracement, and that way you would have skipped this first trade right here, which ended up getting stopped out, and you would have only taken this trade right here. Because if you go back and look at the Dino Bars, let's just quickly zoom in here, right? This was trade number 1, the shallow retracement, right? Let me see if I can draw that properly. And then this was trade number 2, the deeper retracement, right? So, of course, we all want to wait for nice deep retracements because that would legitimately mean we are getting in at the absolute low of the new trend. But, you know, ideally, you just simply want to take every single trend line break and try to get to break even as quick as you can. All right, and let the market do its thing, right? You can see that on this chart right here, there wasn't much work involved with trying to get in on this trade. And we let the market do the heavy lifting. It kind of lifts us up all the way up. While all those dumbass retail traders were trying to fuss around in the market and try to figure out what direction to go, should they short it, should they go long, should they stay out, we got in right here and we were just sitting pretty while the market took off like a rocket ship for almost 200 points on the Dow straight up, right? So anyway, guys, I hope I've been able to show you that trading isn't necessarily hard. It's just you have to have the right mentality. You have to have the right fucking mindset. And of course, you have to be very, very patient to wait for this green bar to print, right? Like as an example, the short signal happened at 7:45 p.m. You saw that from the first couple of seconds of this video. You had to wait all the way until 10:30 a.m. to go long, right? And I bet you there were a shit ton of morons who tried to buy it here. They got stopped out. They tried to buy it here. They got stopped out. They tried to buy it here. They got stopped out, and so on, right? Let the market do the talking for you. Don't try to front run the market. Don't try to think that you're smarter than the market. Let the market come to you. When it wants to turn around and skyrocket and go up, it's going to tell you, hey, boss, here's a long signal. Now it's time to think about going long, right? Anyway, guys, thanks for watching this video. The volatility is definitely back. Keep your eye on the VIX and always cherry pick the best and lowest risk trades. Thanks for watching this video. See you on the next trade.